What happens this week in Washington. You've got the U.S. Federal Reserve making an interest rate decision. Certainly no expectations that we're going to see a change in rates. But after what we heard from the Bank of Canada over the last week, you have to wonder how the Fed might address the BoC's thinking, which is that as slack in the economy is absorbed, the possibility that maybe we'll see an interest rate hike in this country by next year as opposed to the initially thought 2023 timeframe. And that's got a lot of people talking about the mortgage market as well, because many people came on BNN Bloomberg, very quickly said, well, maybe this is the time to lock in fixed rate mortgages. But let's get a contrarian view from the mortgage expert David Larock, president of Integrated Mortgage Planners, who still sees plenty of reasons for people to be considering things like variable rate mortgages. David, thanks for joining us. Nice to have you back on BNN Bloomberg.
Nice to be here.
Let's start with the reaction, certainly the buzz that you were hearing in your circles after the Bank of Canada kind of reset the clock last week, and what people were thinking might happen ultimately in the mortgage market.
Not surprisingly, everybody, the consensus reaction was that everybody should lock in their variable rates. And when the consensus is all aligned on one view, as the famous Bob Farrell said in his 10 rules, when everybody thinks something is going to happen, something else is going to happen. So my contrarian instincts had me looking in a different direction. And I think when you read carefully what the Bank of Canada said, there's lots of reason to think that its rate hike plans are far from guaranteed. Interestingly, the guidance that the market really focused on was that the Bank of Canada said it expects that it will raise sometime in the second half of 2022. But in his press conference, Bank of Canada Governor Tiff Macklem said, we want to be very clear. And his press conference was where he said previously that Canadians can be confident that borrowing costs are going to be low for a long time. And in this press conference, he repeated the phrase, our forward guidance is outcome-based, not calendar-based. And he said that more than once. And I think he wanted to make very clear that, yes, we think we'll raise in the second half of 2022 if a lot of things go well. But the Bank of Canada made clear that it thinks the risks are now skewed to the downside in its forecast. And there's a lot of things that have to go right for the bank to actually end up raising in the second half of 2022, as it said yesterday.
And one of the other things you mentioned, just in going through some factors that might support variable over fixed rate mortgages, is the simple concern within the housing market for what has been happening and the need to find some way to address that, or maybe find a way to sort of influence housing market action without maybe taking too much action?
There's no question. The elephant in the room last Wednesday when the Bank of Canada met was the housing market. When Governor Palaz was interviewed in March or April of this year, he basically explained, look, when we cut rates to emergency levels when the pandemic started, we expected that we would stimulate housing. And given that we were worried about far severe outcomes, remember, back then we were talking about depression-like possibilities. And he said if cutting rates meant we stimulated housing and that kept the economy alive, that's a bet I'll take every day. Fast forward a year later, I'm not sure the Bank of Canada knew when it cut rates back then that this is the outcome that would follow. And the question then was, well, what will the Bank of Canada do? We saw the banking regulator, OSFI, make a small increase to the qualifying rate used for uninsured mortgages. So there was a tweak there. We saw the federal government include a national tax on foreign buyers, home buyers. And there was a tweak there. But clearly the Bank of Canada, bluntly put, started us on the path we have most recently gone down with the surge in housing over the past year. So as far as the market was concerned, it was really their guidance that was driving housing through this next upturn. And it was their guidance that would change course. And they had to walk a fine line because they want to encourage everybody in business to be confident that they can borrow and invest. but they also want to rein in housing. So they hedged a lot. They used the word uncertainty 16 times in their accompanying monetary policy report, and they left a lot of room open to backtrack later if their, I would say, rather optimistic forecasts don't end up coming to fruition.
And we also we showed a board with just some of the factors you're watching, including the fact that I started the conversation by saying we've got that Fed decision on rates this week, and you know, how far away from the Fed's thinking does the Bank of Canada ultimately want to be? So we'll only know with time. But David, just given everything you're saying, for people who are shopping around, they're in the mortgage market right now, just walk us through the dynamics. I would imagine that if you do want to lock in a fixed rate mortgage right now, the banks are well aware of that possible demand. So the idea being, if you stuck with a variable rate, you might benefit for now with what you're paying versus a fixed, and maybe that sort of balances out over the duration of the mortgage. Is that the way to think about it?
Absolutely. Right now, you're getting a discount, a variable rate. You can get a discount for about 0.75% below what you can get a fixed rate for. So basically, that means the first 3 increases by the Bank of Canada would only bring your variable rate up to an equal level to where fixed rates are today. So then you have to say, well, how likely is it that the variable rates will increase to that level, and at what pace? Because the whole time it takes for the Bank of Canada to make those 3 increases, you're continuing to save money on your variable rate mortgage. And the question then becomes, what will I save in the interim, and will that work out to be more, even if eventually my variable rate rises above the fixed rate? And to your point, Jonathan, the Fed, the U.S. Federal Reserve right now is forecasting its first rate increase in 2024. And bluntly put, as I said in my blog, there's really no way that the Bank of Canada raises in the second half of 2022 if the Fed holds fast to its plans to not raise until 2024. That would cause the loonie to soar against the greenback. It would devastate our export sector, and it certainly wouldn't lead to the optimistic outcomes that the Bank of Canada is now hoping for.